Good morning, everyone, and welcome to the final webinar of our 2023 monthly webinar series. We thank you for being here. I am Sarah Grimes, the Director of Outreach and Community Relations at NYSARC Trust Services. And NYSARC Trust Services is a nonprofit organization. We administer pooled trusts as a way to help older adults and people with disabilities be able to qualify financially for means-tested government benefits. Now, today we're going to be focusing on our pooled income trust program. We'll go through some of the basics and also best practices of using a pooled income trust. We have covered pooled income trusts a few times in past monthly webinars, but today's focus will really be on the mechanics of using a pooled trust most efficiently. So we hope that you will all find this information valuable in your work. Before we jump in, just want to remind everybody we do have closed captioning enabled. Please turn that on your end. Everyone is muted. We have a lot of people on the line today, so we have chat disabled. We ask that you please enter any questions you have into the Q&A. Just a reminder for anyone, raising your hand will not work. We do not have an ability to unmute you, so please enter any questions you have into the Q&A. A link to the materials will be sent out in an email within 24 hours. You should get that tomorrow. I have also dropped a link in the chat. I'm going to do that again now, if in case you want to download those materials now so you can follow along. A recording of today's webinar will be available within a few days from today on our website at nysarctrustservices.org/webinars. And at the close of today's webinar, we will ask you to complete a brief survey. Please take just a few minutes to give us some feedback on today's session and ideas for other types of webinars, topics you'd like to learn about in the future. All right, so as I said, we have spoken about pooled income trusts in the past. And today is really going to be focused on taking a deeper dive into just the process of establishing a pooled income trust and using that trust to allow older adults and people with disabilities to qualify for community-based Medicaid benefits and be able to live at home for as long as possible by being able to continue to afford their monthly bills and pay for items and services that their benefits don't provide. We're going to cover why you would set up a pooled income trust, when you set up that trust and how to get started, what are the costs to establish the trust, as well as maintain the account while you're using Medicaid home care services. We'll talk about the process of how you access money in the trust and what are the types of bills you can use the trust to pay for. We'll go into details using an example of also how you arrange those bills to use the trust funds most efficiently. And we'll talk about other items and services that you can use the trust to purchase. We get a lot of questions always about funeral expenses, so we'll cover that as well. And we'll also talk about the transition to nursing home care. If someone is using a pooled trust and eventually their care needs progress where they're no longer able to be served safely in a community-based setting. Now, the primary reason that someone would set up a pooled income trust is to help them qualify financially for community Medicaid benefits. And this is typically because their income from Social Security and other sources of monthly income is higher than what they can have and qualify for Medicaid to pay for basic health benefits, and also, most importantly, those community-based long-term care services, which can be home care in an apartment where you live independently, senior living community, in the home of a loved one, or in your own home, in your own standalone home. And even in an assisted living facility, if that assisted living facility allows outside home health aides to come into your room and provide supports. And there are some select assisted living programs around New York State that have Medicaid funded beds where you can live in the assisted living program with Medicaid supplementing the cost of your care. Beyond that, Medicaid provides other benefits like transportation to doctor's appointments, dental coverage, which can be difficult to obtain when you are over the age of 65 and no longer working. You may not have access to dental coverage through an employer any longer. And it can also provide other types of supports like respite for caregivers, adult day programs, really a wide variety of benefits. And people with disabilities and older adults are able to access community Medicaid, but they must meet strict eligibility requirements and financial limits. Now, these are the numbers for 2023, and I'll remind you of this at the beginning and at the end of this slide that these numbers are changing as of January 1st, 2024. So these are the numbers for the 2023 calendar year. We got a significant increase from 2022 to 2023. So these numbers increased by almost over $600 a month, allowing more individuals to qualify for Medicaid services and reducing spend downs for individuals who may have been over the income limit previously. As of this year and as of today, if you are receiving services right now, your income on a monthly basis for a single person applying for Medicaid must be below $1,697 a month. And that's because there's a $20 disregard for people who have a qualifying disability. So you get that extra 20 bucks on top of the standard $1,677 a month. That's your monthly income, sources of earned and unearned income like Social Security retirement, Social Security disability, could be money you're receiving from a pension. And for those that might have a retirement account, the principal balance, the main balance of your retirement account, a 401k, a 403b, IRAs, that amount of money is exempt from Medicaid asset being counted as an asset as long as you're withdrawing money out of it. And the money that you withdraw is counted towards your total monthly income. So if your total income is above $1,697 a month, you would be required to spend down some of that income in order to access Medicaid services. It doesn't mean you can't qualify. It just means that you may need to use a trust or other planning strategies in order to become financially eligible. For 2023, your assets, money in the bank, savings accounts, money that you have available to you that could be converted to cash to help pay for the cost of your care must be below $30,182. That's generally the first step you're going to look at is your assets before you even apply for Medicaid benefits. You need to make sure your assets are below that $30,000 limit. And you can do that through a variety of planning solutions. There are ways you can spend down those funds. And that is a topic that we covered in detail in August. We had Frank Hemming from Piero, Connor and Strauss join us and talk about some of the ways that you help protect your assets so that those can go to your loved ones and you can become financially eligible for Medicaid. These are things you can do planning in advance of needing Medicaid services. If you are a married couple and you both need care, the income and asset limits are slightly higher. And if you are married and only one of the spouses needs care, if your collective income between the two of you is less than $3,715.50 a month as of this year, you may benefit from spousal budgeting, where you can shift some of your income to your healthy spouse, the spouse who does not need Medicaid services, and avoid having to use a pooled income trust to spend down your income. Now, if collectively your income is higher than that, that option might not work for you. That can get very complicated, so we highly encourage you to meet with an elder law attorney or a skilled professional who understands the budgeting options and rules for qualifying for community Medicaid before you pursue that option. Now, again, before we close, just a reminder that these numbers will be changing as of January 1st. We were hoping we would have them by now, but I've not been able to find them. We may have some attendees that may be aware of what some of the new updates will be. Please feel free to drop those into the Q&A, and I'd be happy to share that with our attendees. Stay tuned. Follow us on Facebook. We'll be sending out an email in January once we have the updated limits. Now, if your income exceeds these limits, you can still get access to Medicaid services using the excess income spend down program. The amount of your income that is above that limit is what needs to be spent down, not all of your income, only that portion that goes above what you can have and qualify for Medicaid. People with disabilities and older adults who typically qualify as having a disability have the option to spend down that money. That has to come out of their income each month, and it must come out of their own income, cannot be paid by someone else. And by doing that, it allows them to qualify financially for Medicaid to pay for home care services, even though their income is too high. Now, there are a few different ways you can spend down excess income. If you have a very low spend down, like $30, paying that money to Medicaid is one way to meet your spend down requirement. The cost of a pooled trust would probably not make sense in that situation. So it'd be easier to just send the $30 to Medicaid each month. Another option is you can use that income to pay medical bills. Paying medical bills and submitting those bills to Medicaid on a monthly basis can allow you to get access to services once you have kind of met your Medicaid deductible. You have a $30 spend down, you send in a bill where you paid a copay for $30, and Medicaid will activate your services. Now, that can work in some situations, but most older adults who need Medicaid and need home care services, between Medicare benefits and any sort of additional health benefits they might have, and the Medicaid, they often don't have enough medical bills to meet their spend down requirement. And also paying bills and submitting those to Medicaid means that you might not have your coverage active until towards the end of the month, which means people need to arrange doctor's appointments towards the end of the month, and sometimes transportation might not be available. So, and especially for someone who needs ongoing home care services, right? You need that Medicaid to be active at the beginning of every month. So an alternative option in New York State for people who have higher spend downs, not enough medical bills to cover that spend down, or for people who just need that money to pay for other expenses, they have the option to deposit those funds into a pooled trust or pooled income trust. Pooled trusts are run by nonprofit organizations. You deposit your excess income into the trust, and that nonprofit uses the funds to help you pay your bills. Now, pooled income trusts are allowable both under federal and New York State law. So for any of you who are listening and may not be located in New York State, this is something that really is exclusively available to New York residents and a handful of other states, but very few do it in the way that New York does. It is an irrevocable supplemental needs trust. So you may have also heard about planning for assets with an irrevocable trust. This is a different type of trust. Put your assets into something else. This is for your monthly income. The nonprofit organization essentially takes ownership of the funds you're depositing, and they manage it on behalf of the individual who's applying for Medicaid, who's known as the trust beneficiary. You're going to hear me use the term beneficiary a lot throughout today's discussion. You have to have a qualifying disability in order to use a pooled trust. And that's the Social Security Administration's definition. So someone receiving Social Security disability income will already qualify. Someone receiving just Medicaid services may need to do a disability determination with their local DSS. Most older adults do qualify because of their age and the type of chronic health conditions that they have as they get older, especially the need for assistance at home with activities of daily living. This is generally something that's going to qualify someone to use a pooled trust to spend down their income. This allows the Medicaid applicant to be able to preserve that excess income minus the small cost of using the trust, as opposed to sending 100% of that money to Medicaid and not having access to any of it. This allows the Medicaid applicant to be able to continue to pay their monthly expenses, things that are not medical expenses, maintain their standard of living, continue to afford their monthly bills, and even provide for things that will improve their quality of life and supplement the care that they're getting from Medicaid, Medicare, and other insurances that they have. The costs of the trust are deducted out of a person's spend down. So you do not have to deposit extra money. You just put in your spend down amount. We'll deduct any expenses out of that, and the rest is available for that person to use. And we'll talk about the costs in a few slides. And this can really be a lifeline for seniors, older adults, and people with disabilities who want to be able to live at home, who want to be able to stay in their community and get access to services in a community-based setting. Just a reminder to those of you who have your hand raised, we're not able to unmute you, so please put any questions you have into the Q&A. Now, there's many benefits to using a pooled trust. This is going to allow this person to qualify financially for the Medicaid services, maintain continuous benefit coverage. Once you enroll and set up a pooled trust, Medicaid or your local HRA, DSS office will typically extend coverage for 6 months to a year at a time, which means you're getting that consistent care. You don't have to worry if your transportation is active. Don't have to worry about when to schedule doctor's appointments. And you know that every month your home care will be there. It helps to pay for things your Medicare benefits don't provide. So again, you're still keeping Medicare benefits. Medicare will still cover the same things it's covering now. Medicaid comes in as the secondary payer for things that Medicare doesn't cover, primarily those extended long-term care services. Medicare will only cover a very short period of home care. It can also help people qualify for the Medicare Savings Program, reducing your accountable income down to the Medicaid level makes you eligible for Medicare Savings Program. And that is a program that allows you to essentially have your Part B premium for Medicare added back into your Social Security check. Instead of that being taken out, it's being covered by Medicaid. So that can be $165 a month savings as of this year, and I'm sure that number will be changing again in the new year. That can often cover the cost of using a pooled trust, depending on your situation. And most importantly, getting access to the care that you need, therapy services, whatever programs you need to support your ability to live at home for as long as possible. Still being able to afford your bills and being able to maintain the standard of living that you are used to and comfortable with. And even providing for things that will improve your quality of life, make your home more accessible, make your home more comfortable, and support the individuals in your life who might also be providing care to you. It could be family, neighbors, loved ones. It can help getting services in place, can help provide not just support in giving you care so that that caregiver can take some time off or go back to work, but also for some caregivers, they're also contributing financially to support their loved ones' needs. And so this can help relieve some of those expenses for caregivers as well. Now, joining a pooled trust is a pretty quick process. It is something that you do when you're ready to utilize Medicaid services. When you're protecting your assets to reduce your assets so that you can qualify for Medicaid, it's best to do that as early as possible. Now, there's no look back period for home care services, so you can transfer assets and qualify for home care the following month, but you do have a 5-year look back for nursing home care. You want to make any transfers 5 years before you may go into a nursing home. So when you go, the first step you're going to take is to look at your assets and make sure you're below that asset limit. That's something that you do either planning in advance, or you can do it at the time you need Medicaid services. Once your assets are below the limit, that's when you can go ahead and apply for Medicaid services. And that's when you might start conversations with the pooled trust about setting up an account if you know that your income is going to be above those limits. You set up that pooled trust when you are receiving or ready to receive Medicaid. If you're not already deemed disabled because you receive Social Security disability, or you've already gotten a determination of disability, then you may need to fill out some extra paperwork and submit that with your Medicaid application. I provided a link to those resources on the New York State Department of Health website here on the slide. And that is something that is a requirement to use a pooled trust. You must be formally deemed disabled. It's not a requirement of the pooled trust, but of the local Medicaid office. So you need to, if you have questions about that process, contact your local Medicaid office and they can provide you with the appropriate forms and explain the next steps to complete that process. Then you can apply for your pooled income trust. You're going to download a copy of our joinder agreement from our website or contact our office and we'll have one mailed to you. You fill out that document, the beneficiary needs to sign it and have it notarized. Or it can be signed by someone with the legal authority to establish the trust on their behalf, like a power of attorney or a legal guardian. Beyond the application, we need a copy of the beneficiary's Social Security card and their benefit award letter. Now, if they have a Social Security 1099 form, they can send that to us and it gives us everything that we need. You attach that to the joinder agreement and you need to also provide funding for the trust. You can fund the trust by filling out an electronic deposit form and making your initial deposit directly from your bank account, or you can set it up by check and you make a check payable to NYSARC Inc. Community Trust for the benefit of the beneficiary's name. There is a deposit slip for starting the trust with a check, and you want to make sure that you get that deposit slip because the check is mailed separately from your application. It goes straight to a bank lockbox. If you have questions about that, there is a wonderful page on our website that outlines this process step by step, and you can also call our office. Generally takes about a week or two to receive all the information, process, review the trust, and establish an account. For people who are making monthly electronic deposits, we ask that you hold a minimum of $100 in your account at all times. That is how we are able to protect our beneficiaries from overdrafting into each other's accounts by always having a small cushion in the account. The final step is to make sure that you inform Medicaid that you are using a pooled trust by submitting the trust documents and in some cases, a verification of your deposit into the trust to your local DSS. On our joinder agreement, you would fill out that information of who you want us to send those documents to, and that is the individual who is responsible for providing that to Medicaid on your behalf. That's a really important step to make sure that Medicaid is aware of where your spend down is going so they don't try and collect it. Same with your MLTC. Now, that is the process of setting up the pooled trust. The next step is then to get Medicaid approval and actually get services in place. There are assessments to have Medicaid will come out and look at what your needs are, and they will issue you a certain number of hours for home care services. And then you will have to staff those hours by working with a program and a home health agency to get services in place. And there are a variety of different options. Now, the cost to set up a pooled trust and maintain it on an ongoing basis. In our program, we require you open with at least $300. So let's say, for example, you're applying for Medicaid, you still don't know what your spend down is going to be. You can establish the trust with $300 deposit. We will deduct a $200 one-time non-refundable enrollment fee from that amount. And then the trust is there for you to use once you have approval for Medicaid and are ready to make your first spend down deposit. Fees will be charged at the lowest monthly fee until you fund the trust, and then the fee will be based on your spend down deposit going forward. If you know what your spend down is going to be and you just need to set up the pooled trust, As long as it's greater than $300, you can simply open with your $500 spend down, for example. We'll deduct the $200 enrollment fee from your initial deposit, and then monthly fees will begin based on that spend down amount. NYSARC's monthly administrative fees are a flat fixed amount based on a sliding scale. Our fee schedule is publicly available on our website, and we also have a great fee calculator where you can just log in, punch in your spend down amount, and it will spit out an approximation of your monthly fees. They start at $30 a month. And as of November of this year, we have capped our fee schedule to $420 a month. So no administrative fee will exceed $420 a month. And that is for new beneficiaries as well as existing beneficiaries. So if any of you are on the call who have a higher spend down, you may have seen a reduction in your monthly fees as of November. I did include a copy of that new fee schedule in the materials, so please give us a call if you have any questions about that. There are some other changes that will be effective January 1 of 2024, so we encourage you guys to take a look at that. Then we have monthly bank fees. Those are for our co-trustee to manage the assets in the trust and help to process payments. A very nominal monthly expense usually amounts to pennies to a couple of dollars, depending on how much you're keeping in the account on a monthly basis. It's 1% annually that's charged at a monthly rate. And again, going to our website, you can punch in your spend down and it will tell you approximately what those bank fees are. As of today, we have a $1 allocation fee, but beginning in January, we have removed that fee. So if you're looking to apply for a pooled trust starting next year, you will no longer have that fee, and that's why it's not listed here. Beyond that, the trust charges one time a year an annual tax and audit. That is for the trust to prepare the required tax preparation for the trust. And we have an independent CPA firm come in and audit our operations. That's charged once a year in July. We do not have any limit on how many disbursement requests a person can send in, how many times they call us. It is a flat administrative fee that covers all of the activity in the trust. And we have no annual renewal fees. But that is something, these are things that you may see in other trust programs, as pooled trusts all have different fee schedules. So we encourage you to look at that and make sure you understand the full cost of your pooled trust, depending on what program you're considering. Now, we're going to talk now about how to actually use the funds in the trust and what is the process? How does this actually work? So now that you've set up your pooled trust, you're going to make your deposits into the trust on a monthly basis, either electronically from your bank account, which is certainly recommended. It makes it a lot easier to know that you pick a day of the month that it's going to transfer into the trust. It's also helpful to know consistently when money in your trust will be available for disbursement. So we highly encourage people to use the electronic deposit option. You can also mail a check each month if that's what you're most comfortable with. The funds that are in the trust must be used for the primary benefit of the individual who's receiving Medicaid services. We can buy things that are items and services that are for that person and for their primary benefit, and typically things that supplement the services that they're receiving from government benefits. If a bill or expense is the same amount each month, we can pay it automatically. You can fill out an automatic payment form and we can set it up for a recurring monthly payment as long as it's the same amount each month. Requests will always be paid to a third party. You submit your electric bill, we're going to pay the utility company for that payment. You submit your rent agreement, your lease, we're going to make a payment directly to your landlord. That's to ensure that the money in this trust account never goes back to the Medicaid applicant. We cannot give money out of this account to the Medicaid applicant. That would be treated as income to them and would potentially impact their financial eligibility for Medicaid services. So always going to pay a third party. And it's important to note that this is a trust that is being funded with a person's own money, which means that there is a Medicaid payback upon the death of the beneficiary. And it's a federal policy that we cannot make any payments out of the trust after the date of death of that beneficiary before repaying Medicaid for the services that were provided to them. So it's very important to be using the funds in your trust regularly and submitting requests as you have them so that we're able to process as many bills as possible and utilize as much of the money in the account to assist the individuals receiving Medicaid services. Now, for someone who's using a pooled income trust and only receiving Medicaid services, these are some examples of some of the allowable expenses and things we can't pay for. Now, this is not a complete list. This is simply common examples of things that people use the money for. And it's very different for each person because every person's living situation is different. Every person's family structure and financial situation is different. So what one person may use the trust for may be very different from what someone else uses the trust for. And like I said, we'll go through an example here in a minute to help illustrate that. So again, primarily what we're paying, and we're going to prioritize paying people's basic living needs first, because we need to make sure that that income is being used to support their ability to stay at home. We need to make sure there's a roof over their head, food in the fridge, electric bill is being paid so that they have their lights on, they have heat, right? Typically, a lot of people will use the trust to pay for rent or mortgage because those are fixed expenses and typically large expenses that we can automate each month. Pay things like utility bills and really any sort of service or bill to a vendor. We can pay for vehicles like a car payment, a lease payment. We can pay for insurance, maintenance to that vehicle, gasoline. We can pay for other types of transportation. If you don't own a car, you need a Metro card, you need a bus ticket. Those are also forms of transportation we can pay for. Ubers, Lyft services. Other types of insurance, not just car insurance, personal items, and any sort of services that are going to benefit this individual and give them a better quality of life. It can also be things that are just purely life enhancing. Technology that's going to make it easy for them to communicate with loved ones. Equipment, adaptive assistive technologies that maybe aren't covered by their government benefits that might make them more comfortable or provide them with better care. And even things that are more fun, like recreation, entertainment, going to the movies, getting your hair cut, and things that are leisure, going out to eat with your family. It's really up to that person and what they want or need, and how much money they have available in their trust account to pay for these services. Again, just a reminder to those that may be raising their hand, please enter any questions you have into the Q&A. And there are things that we can't pay for. As we've already gone over, we can't give money to the beneficiary. We can't reimburse them for something that they bought with their own money or bought out of funds from their checking account. We cannot put money into an account that has our beneficiary's name on it, even if the money in that account wasn't theirs. If their name is on it, Medicaid considers it to be their money. We can't provide reimbursement or pay rent to a spouse either. It's just like putting that money back into the beneficiary's account. We can't pay for property expenses of a property that our beneficiary doesn't own. That's not going to be for their primary benefit, right? That's going to primarily benefit the person who owns that home. We don't buy gifts for other people, okay? Because again, that primary benefit rule, it's got to be for this person. Medicaid's allowing you to keep this income even though you technically shouldn't get Medicaid services by having this excess income. They want to make sure you're using it for yourself and for your bills. That's the purpose of the money that's going into the trust. You still have money outside of the trust. So it doesn't mean you can't buy gifts for people. It just means you can't use the money in your trust for that. We can't pay life insurance policy for the same reason. Paying life insurance policy is going to primarily benefit the beneficiaries of that policy, not the person who's paying it. Okay, doesn't mean you can't have it, just means the trust cannot pay for it. And there may be other reasons why you can't have a life insurance policy, or you may need to protect it, and that's more on the asset side. And typically, we're going to consider each request to see if it's something that Medicaid should have paid for. We want to make sure that that person is getting the full benefit of their Medicaid services. So we should be paying for things that supplement Medicaid benefits. However, there may be situations where someone's not receiving what they need from Medicaid. And so on case-by-case basis, at the discretion of the trustees, they can review those requests and distribute funds as they believe is appropriate for our beneficiaries. And in some cases, there are medical bills and other expenses we don't pay because they're already being paid by other programs. Or, for example, your Medicare premium or other insurance premiums you may be paying might already have been deducted out of your spend down calculation. And so us paying it out of the trust would be double dipping. Those are really unique situations, and again, evaluated on a case-by-case basis. So if you have a question about that, we encourage you to contact the trust and ask those questions of the trust, and they can communicate with you based on your unique individual situation. Now, how do you access the money in the trust? What is the process of actually getting the trust to pay your bills? You fill out a request form, which needs to be signed by somebody who has the authority to submit requests on your behalf. It could be the beneficiary themselves or someone who they've given that authority to. Or if it's a recurring expense, that's the same amount each month, you'd fill out an automatic payment application. That needs to also be signed by an authorized individual. Then you attach a copy of the documentation that supports that request. So we always need some form of documentation to supplement what we're paying for, so that if Medicaid asks, we can always produce that paperwork. That could be the bill, it could be a credit card bill with receipts, it could be an invoice for a service that's going to be provided. There are many options. And then you would submit those bills along with the appropriate form authorizing the payment to NYSARC by email, by fax. And as of January of this year, you can upload them through our online portal. We're very excited about that option. It is something that a small group of our beneficiaries and contacts have been using since September. They've been really helping us pilot it and test it out, make sure that it's working. And we are very excited to be offering that service as of the new year. So this will allow you to no longer have to download the form, no longer have to fill that out. It'll all be filled out online. It'll give you a page where you upload your supporting documents, and it will be sent directly to our team for processing. It's important to give us as much time as possible to pay these bills, and you'll see that illustrated through the next couple of slides. So we ask that you give about 14 days before the due date to send in that bill. Sometimes that's not possible, but to the best that you can, we want to give us as much time as possible, because there may need to be follow-up. Depending on how you're sending the bill, there could be a delay. And so we want to have as much time as possible to process requests. Once we receive all of the information we need, we typically process bills in about 3 to 5 business days, and then a payment goes out to that vendor. Just to recap some of the basic requirements for submitting a request to the trust, it has to be for that person's primary benefit. Generally an expense that was incurred after the trust was opened and within 90 days of you submitting it. If you have an expense that doesn't meet that requirement, contact us and we'll review it on a case-by-case basis. We're looking for bill or documentation that's showing that this service or item is for our beneficiary. Any sort of additional supports, receipts, and other supporting documentation, and that payment must be made out to a third party. Now, here's an example we're going to use to kind of walk you through how the mechanics of the trust work and some of the timing of paying bills. So Barbara is 86. She lives alone in her own apartment. She's pretty independent. She has some chronic health conditions. Her daughters are local and they help out, but she recently had a fall and now she's going to need some additional home care support to help her around the house with things she can't do any longer. Her income is too high to get Medicaid services, but she only has a savings about $20,000, which is not going to be able to cover any sort of extended private pay home care. So Barbara's excess income is a little over $1,600 a month. Once we take into consideration the cost of the pooled trust, this is an approximate estimate based on the fee structure for NYSARC trust services. We'll deduct that out, and on a monthly basis, once she's enrolled in the trust and actively using it, she'll have about a little over $1,500 a month to spend on her bills. So we're going to pick bills that we can automate, bills that are typically larger expenses, which is going to reduce the number of requests she needs to send to the trust. That's going to make it more efficient and easier for her. Don't send groceries to the trust where you've got to hold on to receipts and figure out how to pay for it on a credit card or have somebody buy it for you and be reimbursed. Send us bills, something you can always get another copy of. Now, not everybody has that luxury. If you have a very high spend down, you may need to use the trust for those types of expenses. But try and be as efficient as you can by picking a few larger bills and ideally things that can be automated, like rent, electric bill that's on balance billing. Those are the same amount each month. And her cable and cell phone bill does fluctuate from month to month, so she will have to submit that every month. Oh, other important thing to note is this is not all of Barbara's income. This is only the portion she puts into the trust. On the right-hand side, you'll see she's also able to keep $1,697 a month in her bank account, and she has $20,000 in assets available to her. So these are just some of the tips and best practices I've already discussed a bit, and just for the purposes of time, I'm gonna run through these pretty quickly, but automate what you can, choose a few larger bills, send the same bills to the trust every month, make sure you're submitting regular requests, and send them to us immediately. You don't want to be caught in a situation where you didn't send a bill to the trust and then the trust account closes and we're no longer able to pay that expense. If you're able to, download the bills online instead of waiting for that paper statement in the mail. That's going to allow you to get us the bill more quickly and give us more time to process the payment. You can also automate your expenses on a credit card. Set up automatic payments from your credit card and send one request each month with all of your expenses on that one credit card statement. That can help, again, make sure your bills are paid on time, give you that peace of mind, and reduce the number of requests you need to send into the trust. And also keep in mind that national vendors or vendors that are part of a national ACH list can be paid electronically rather than paper check. And so if timing is a concern, picking vendors like Spectrum or Verizon Wireless or Con Edison can help us make payments even faster by making those payments electronically. Now let's talk about the timing here, because I think this is an important thing. The concept of using a pooled trust is relatively simple, but it's when you get into the nitty-gritty nuts and bolts of how it actually is administered, this is where I think this will be very beneficial to our attendees. So Barbara's making an electronic deposit from her bank account. Based on when she receives her income, she can't make that deposit to the trust until the 4th of each month. So every month on the 4th, NYSARC receives her electronic deposit of her spend down. Now we need to wait a few business days to make sure that that money clears and is actually available before we start sending out money to pay bills, because this is a pooled trust. Everybody's money is pooled into one bank account. So if we pay bills out of Barbara's account and her deposit bounces, then we could theoretically be using someone else's money. So very important that we give that time for that electronic deposit to process and clear. So the 8th of the month is the first day that we're able to pay bills. And that is really important for people to understand, because when you're looking at the different types of bills you're going to use the trust to pay for, you really need to be considering what are the due dates of those bills and how am I going to have the trust pay that on time. So rent, first example, rent, that's due on the 1st. We don't even get the money until the 4th. It's not available till the 8th. There's no way, no matter how fast we process that request, that we'll be able to get that paid on the 1st. So what we would do is we would look at scheduling an automatic payment later in the month to be paid for the following month, so that this month, December, we're paying January rent. So the check arrives by the 1st. So that's really important. And this is something that our team will review and go over with each of our beneficiaries during the welcome call when we talk about how they're going to use the funds in their trust account. The electric bill is due on the 17th. So again, we want to give our team as much time as possible. We schedule that as early as we can to be paid on the 8th. Cable bill, it's going to fluctuate month to month. So that's something she'll submit to us every month with the disbursement request form. It's due by the 20th. So we recommend she sends that to us as early as she can, but the 4th would be a good time. That'll allow time for us to receive it, process the request. Again, we can't make payment until the 8th, but we can receive that bill and get it all set up for payment to be paid once the funds clear on the 8th. Now, monitoring your account, tracking the activity, seeing how much money you have available is very easy. You have access to a team of customer service reps who are available weekdays from 8:30 to 5, answer your questions, and help guide you through this process. Every person's situation is different and unique. So allow us to help you. We have been doing this for a long time, and we can help provide the information that you need to set things up most efficiently. Use our team as a resource. We provide multilingual customer support in hundreds of different languages. We also have an online portal where you can track the activity in your account. And as I mentioned, as of the new year, submit disbursement requests through the online portal. There's an automated phone system you can call into as well. That's available 24 hours a day if you are more comfortable calling and listening to a recording of your recent transactions. We send out monthly account statements, so you'll be able to get a detailed accounting of your trust month to month, but those come out typically a few weeks after the close of that month. So the most real-time information about what's available in your account and what requests are in process will be through the online portal or the customer service department or the automated phone system. We can send verifications of your monthly deposits to your local DSS or HRA. That's usually required once a year when you recertify for your Medicaid benefits. And you can also download those reports from the online portal and send them yourselves. We will always be able to provide a full detailed activity history if it's requested by your local Medicaid or DSS office, because we keep digital records of everything that you send to us, including your receipts and invoices, so that we can produce that documentation if we are requested in the future. And as I mentioned earlier, with the tax and audit cost each year, we handle all the tax reporting for the trust. And we often get asked about paying for funeral expenses. This is something that we can pay for during a person's lifetime. Once that trust closes at someone's death, we can no longer pay funeral expenses. So yes, we can pay funeral, but only during your beneficiary's lifetime by setting up an irrevocable pre-need funeral agreement. It's a contract that you enter into with your local funeral home or funeral director to pay for your future funeral and burial expenses. That contract, because it's irrevocable, and most funeral homes will be very familiar with this process, is considered an excluded asset for Medicaid eligibility. So we can either prepay it in a full lump sum if you have enough money in your trust account, or you can set it up and we can make payments to it to pay off that contract during the beneficiary's lifetime. And that can be a great way to spend down money if you have a larger balance and someone may be going into a nursing home. So it's an important final thing to close us out today. There are times, our goal is certainly to allow people to live at home for as long as possible. But there are times where people's needs progress and they may no longer be able to be safely served in a community-based setting. If they go to a nursing home just for a rehab period, they had a stroke or a fall, they've been hospitalized, and now they're doing a short rehab, they're still able to use their pooled trust so that they can return home. They want to be able to keep meeting their spend down and pay their bills so they have a home to return to. If they're going into that nursing home permanently, where there is no intent to return home, they're eventually going to switch to different type of Medicaid, chronic care Medicaid. That is different from community Medicaid. You can no longer protect your income in a pooled trust once you're on the nursing home chronic care Medicaid. You're going to stop any deposits to the pooled trust, and almost all of your income minus a small allowance will go to the nursing home to cover the cost of your care. If that's the case, your trust account, the money you still have in your trust, is still there for you to use during your lifetime. You simply submit request to utilize the balance up to the date of death. Now, keep in mind, each time you make a deposit into a pooled trust, it is a transfer. And when you go into a nursing home, they do a 5-year look back of any sort of transfers that you've made. And so if you have a balance still in your trust, that money may be treated as an available resource to you. Now, again, you still have up to $30,000 asset limit. So in Barbara's case, who has $20,000 on the side, she can have up to $10,000 in her pooled trust and still and not incur a penalty. If she had more than that, then that would be where there'd be a concern. And again, she may need to just private pay for some services, and she can use the funds in her trust to do that. And so we encourage you, if someone or your client is going to be going to a nursing home, contact the pooled trust early so that you can work with them to help spend as much money as possible and go over, make that a smooth transition. There are many things we can use the trust to pay for. And also keep in mind that any transfers to the trust before the person was 65 are exempt. It's really just those transfers after someone was 65. So this does conclude our monthly webinar series for 2023. Can't believe we're really at the end of the year here, and already in the heat of the holidays and many more just around the corner. So just warm wishes to everyone for the coming year. And please visit our website, sign up for our mailing list for updates on other learning opportunities in 2024. And please complete the survey so that we can get ideas from you on other topics that you'd like to learn about.